Welcome back, Alpha Owners. Hope everybody had a great and fantastic week this week. I am still being my best bull by not changing the thumbnail, so everybody continue to ride the wave. Now, there was a lot that went on this week, so I'm going to skim over all the fine details and just kind of work through all of the things that we kind of just need to know what's going on in the marketplace, because there was a lot this week and I don't want to spend 2 hours in this video. So let's get it going. Monday, nice little subtle gap up. Not much kind of went on. Kind of a sideways day. Nice little uptrend into the afternoon, and then we sold down, but ended off the lows of the day on Monday. Not bad. Tuesday, nice little gap down, but we just traded higher all day pretty much, except for that last hour. Then we kind of dropped a little bit there going into close. And then Tuesday after the bell, we got Microsoft and Alphabet earnings. So we had a little bit of a gap down. Microsoft had a gap down on earnings. Alphabet had a gap up on earnings. It kind of offset, but they did gap down on the market. And then the market kind of just went sideways until we got to the Fed meeting. I wasn't on the live stream this Wednesday, as it was poor planning on my part. Went and saw the movie Oppenheimer, and I highly recommend it. But the Fed did exactly what we've been talking about for a while. They raised 25 basis points, and the market popped initially, and it came back down, took out the daily low, and then popped again. Normally on Fed week, usually this is the big activity, but when you have big earnings week, not so much. We did have a gap up overnight on Thursday as Meta had earnings Wednesday evening. So we had a nice little gap up. We traded down, had a nice little retest, tried to bounce, and then we just rolled over for the last 3 hours of the trading day on Thursday. What was very interesting about Thursday is all you need to know for the week, because it was the high and the low for the week. Thursday after the bell, we got Intel earnings, and they actually were pretty good for Intel. It's been a while since they've actually had good earnings, so you know what? Intel, good earnings, positive, good for them. And if you've been watching here for months, I've been saying Intel, this is a place you've been wanting to buy it. Actually lower, around that 28 level, that has been where you wanted to be buying that. So nice little gap up there. Another thing that came out overnight was the Bank of Japan decided to raise its interest rates as well on bonds. So that was another thing that kind of happened. And also we got the CPE numbers, another inflation metric, and one that the Fed highly watches, early Friday morning, and it was showing that inflation is coming down. So a nice little gap up, ran higher for a few hours, rolled over, took out the daily low, and then bounced for about an hour and a half, and then kind of came down and settled somewhere in the middle. Off the highs, off the lows. But that's how the week ended. All right, take a look here at sector rotation for the week. We can see one thing very clear. XLC, which houses Alphabet and Meta, which both had earnings back-to-back days, Tuesday and Wednesday after the bell. So you can see the orange line here getting a nice little pop from Alphabet there into Wednesday, and then into Thursday, Meta getting a nice little pop there for the XLC. XLC by far the best performing sector for the week. There was only one other outperforming sector for the week, and that was the XLB materials. Other than that, all other sectors underperformed. So outside of the XLC, did the market really have a good week? Well, I mean, it kind of just works that way, right? And sometimes sectors rotate and they lead, sometimes they don't. So discretionaries were basically in line with the market. Energies just underperforming. Staples and tech, a little bit underperformance there. Some underperformers were industrials, financials, and healthcare. And then some major underperformers, utilities and real estate. And they really lagged behind Wednesday, Thursday, and Friday. The sentiment survey came in Thursday morning, had a very nice drop compared to the huge bullish move that we had on the reading last week. But the bullishness came in at 44.9% and the bearishness came in at 24.1%. Federal Reserve balance sheet data came down 1.8%. Week over week, came out Thursday after the bell. For being such a busy week this week, the VIX didn't really move huge amount. Like it moved pretty good, especially on Thursday. We were seeing a lot of selling. The VIX did pop a lot during that afternoon, but nothing crazy here on the VIX. I was kind of surprised. There was a lot going on this week, which is why I was kind of surprised the VIX wasn't moving more than what it was. The US dollar index, or the DXY. Well, I'm going to spend a little bit of time here because this was very important to know and be paying attention to. So past couple weeks, I've been mentioning that any retest up into the 101 area to 101.50, you know what, I can understand taking a bearish play and trying to take that back bearish. What we got late last week, last Friday, I think I even called it out like, hey, you know what, not a bad spot to maybe take some bearish into really Tuesday. Tuesday had a little bit of an extension higher that kind of was like the upper bounds of, you don't really want to see it go much higher than that, but it rolled over into early Thursday. This is important. That is when it stopped rolling over and it bounced very hard, as you can see. It basically bounced super hard when the US GDP data came out, and you can see it just absolutely ran when we got that information. And we actually wound up on Friday breaching over the 102 level. Okay, so that's this low, basically this little double bottom low that we had back in the late June kind of time frame. This is very important. I would be, if you did try to take this bearish, you need to be very disciplined here, as you don't want this now rallying up over, because all this will be is a false breakdown. And once you probably start to get over the 102 to 102.50 level, you're probably going to start to get a lot of people starting to close out bearish positions on dollar, and maybe even starting to pick up longs. So if you were looking on this bearish trade on the dollar, I would probably have stop losses right above these highs. And if we continue to push here over the next couple of days, early this next week, maybe into Wednesday, if we start to push over the high that we put in on Friday, these little lows that we put in back on June 30th and July 3rd, I would put the stop loss right above that, right around that 102.8 level, and say that's going to be the line in the sand. But if it pushes up kind of aggressive, it freaks some people out and then rolls over, okay, cool. But this just did not look good on Thursday and Friday. Like, it should have continued back down, but you got to give it a little bit of room, as it still really hasn't broken higher. But I would definitely be having stop losses right above these highs, ready to drop them if it starts to push up over 102, especially over the 102.50 level. GLD, the gold trust. Well, not a whole lot going on. Kind of sideways on the week compared to, kind of where it ended last Friday right here. So yeah, not a whole lot kind of going on here. And if the dollar, like we were just looking at, pushes higher, gold's probably just going to get crushed. So I would just be a little cautious here. The US 10-year yield. Well, Thursday was very strong. That was kind of the day of the week. Really all you need to know about the 10-year yield. So take a look here at the 15-minute intraday, and you can see when it took off. Same time the dollar took off, right when we got the US GDP data, took off, and it started to pull back a little bit there on Friday. So I would be cautious on the bullishness on the stock market, and I'm going to zoom out here. And I'll give you very clear indication why. Because when we were running bullish on yield last year, back in 2022, this is what was putting a lot of pressure on the stock market. Not really so much inflation, but the valuation of what you had to adjust equity valuations. And bond yields last year were having a very strong year. And if you just look at this on a technical level, we just have a consolidation. This is all this is. This looks like a consolidation. And if we continue to break up and get up over the 4% level, and then make a run back up to the October highs from last year, get back up over 4.3% or so on the 10-year yield, and even the 2-year yield, right? Even the 2-year yield, when you go look at that as well, this will put a lot of pressure on equities, especially if equities continue to rally. So if there's any one thing that's going to put pressure on equities to maybe not go bullish and maybe even go bearish, and go bearish in a hurry, is if bond yields continue to push higher. Looking here at the 10 and 2-year yield curve inversion, nice little subtle rally this week. Nothing crazy, nothing like the spike that we got earlier in July, but it is a little bit of a rally. It might continue going into next week, so we'll see. HYG, the high yield corporate bonds. Well, this is the do or die time now for bonds. Basically, we've gotten a sideways consolidation. Okay, so now we need to be seeing this pop higher. Thursday, we saw a lot of bearishness. I thought we were going to continue bearish, but the market came out Friday morning and was very positive and got back into that consolidation zone. So it can kind of go either way right now. But this was one scenario I was talking about a couple weeks ago when we had that monster run on the HYG and really just all the bonds, where you wanted it to either break out or pull back into this zone, or you wanted to consolidate right here and then push higher later. Well, we have gotten that sideways consolidation, but if it consolidates too long, it will probably just break down, and it tried to on Thursday, so we'll see what happens. But the continuation of a breakout needs to happen relatively soon, or this thing is going to wind up dropping. So the LQD, kind of like we were just talking about the HYG, had that sideways consolidation over the past couple of weeks. Thursday broke down. Friday, though, didn't get back into that sideways consolidation. Kind of more of retested into the bottom end of that. So it's kind of an interesting little look there. And if we come out Monday or early next week and we just start trading down on bonds, that might have been all it was just a retest Friday. And if you look here at the TLT, I can zoom out. This is very important. I've kind of pointed this out before. We have a nice little downtrend on some highs here going back for the past couple of months, and we have a very important support level basically right in here. And we are getting to that point where it is sitting right on it. And even earlier in July, it bounced off this level. So Thursday, we broke down to it very quickly. Friday, we didn't continue the breakdown, but we didn't bounce up nearly as hard as the HYG and the LQD. So these guys might be breaking down. So it's going to come down to the TLT and the HYG. Which one is going to kind of lead the market in a direction? If bonds are going to go bullish, most likely the HYG is going to lead it. If the bond market's going to go bearish, most likely the TLT is going to lead it. All right, taking a look here at week-over-week options change activity, and we can see just a lot of puts being bought. A lot of puts bought for August 18th, September 1st, and September 15th. You can see that the total put activity is still dominated by September 15th and August 18th. And really outside of a few of those weeks, not much of really strange activity. Quite a bit of put buying for this next Friday, but nothing, I would say, too far outside the normal range. All right, so let's run through some stocks real quick that had earnings this week. I'm not going to get too in depth here. Microsoft, though, they did beat on earnings, but they didn't say like, hey, our forecast is super strong, we're looking really good. They kind of said the opposite. We're pulling back our forecast a little bit. So, but they did beat on top line revenue by a little bit over 1%, and they did beat on bottom line by 5.5%. So nice little quarter there from Microsoft. But a couple things that they did say was they're not getting enough chips to continue to facilitate AI growth, which is a big deal because we've seen a lot of AI speculative runs in the market here recently, especially over the past couple months. So if they're not being able to build out the infrastructure, how are we going to continue to have growth in AI? And this might be the biggest issue for AI. Is not the software side. It's the physical side, the ability to buy and build up the semiconductors for it. And what's kind of interesting is Microsoft saying they can't get the chips, but yet Taiwan Semiconductor from last week was saying they don't see the demand to make the chips. So what's going on here? That's all I gotta say. What is going on here with AI? And we'll talk about that once we get done running through these stocks. Alphabet, good quarter, very nice. Beat the top line revenue number by 2.5%, beat bottom line by 7%. Very nice quarter for Alphabet. I'm gonna come back to Alphabet's earnings at the end. Meta Platforms doing very nice as well on earnings. They beat revenue by 3%. They beat bottom line by 2.5%. Very nice quarter. The one issue here on Meta is they continue to spend billions and lose billions. Not even just spend billions, but lose billions of dollars in the metaverse and trying to build out the metaverse. I think they lost somewhere around $4 billion in the metaverse, and they crushed numbers. So think about how good they would have been if they weren't spending all that money in the metaverse. Take a look here at Intel. Very, very good earnings from Intel. They actually were expected to have negative earnings, but they actually had positive earnings. So very nice quarter there from Intel. But they did beat top line revenue number by roughly 7%. All right, looking here at the equal weight SP 500, the RSP, and I'm going to zoom out here a little bit, and we got back to the high that we put in back in February. We actually did take it out. That high on February 2nd was 155.72. Thursday, we got to a high of 155.77. So we took it out by 5 pennies, and that was where we basically gapped up to on Thursday and just sold off. What's very important to know here is this would be a really good spot to not be bullish on the RSP. You're going to want to wait, let it break out, and get it on the pullback. But very nice move here on the RSP over the past 2 months. The DIA, the Dow Jones Industrial Average ETF, was making a lot of news here recently as they were on a winning streak that was kind of rivaling almost over 100 years of data for the Dow Jones. So yeah, very nice there on the Dow Jones. We are definitely getting the breakout here on the Dow Jones. So yeah, any pullbacks here into like the 345, 348 type level, you got to be buying. You got to be buying, even maybe down to 340. But you get below that, under 337 or so, back below some of these lows. Yeah, yeah, at that point in time, I'd probably flip it. But yeah, anything down into like the mid 340s, I'd just be buying it. The IWM. Well, this is another one that's kind of at a little bit of a top area from back in early February. I don't think I would be bullish right here. I would be probably scaling it back because we kind of have two tops back to back here. So I would be wanting to wait, let them break both of those and then get it on the retest and then take it. But I mean, even if you took some profits here and then got back in a few points higher, you're not missing a lot. But the downside could be a lot more. And here's the other thing is if we do reject from here and roll back down, we could definitely pick it back up around the 187 to 185 type level, or anywhere kind of under 190. That would be a little bit better of a positioning. But right here, I don't really like this level. All right, the Qs. So what's kind of interesting with some of those tech earnings is it seems like AI is not seeing mass adoption. Okay, that's my justification and my rationale for some of the earnings that we were hearing this week. Alphabet did good. Alphabet crushed earnings. You know what that means? They're not seeing competition. They're not seeing search go away. And here's another thing. There was reports at the end of June, at the beginning of July, that ChatGPT was seeing huge drop-offs in its activity in June or at the end of May. And guess what happened? School went on hiatus, right? They went into summer. School was gone. Students stopped using it. So since that happened, I don't think we're really seeing that mass adoption of AI yet. They are building out infrastructure as we're looking at some of these fundamental earnings report numbers and balance sheet numbers that came out this week and statement of cash flows. They were definitely spending like a lot of these larger companies, Microsoft, Alphabet, they were definitely spending money building up infrastructure. We were seeing that. But all that means is their expenses are going to be higher going forward. And if no one's using it, then it's just sunk cost, which means margins are going to be hit going forward, even though they weren't hit this past quarter because nobody's using AI yet. That was a benefit for Google, but it might not be going forward. Anyways, we do have a little bit of a switch here on the Qs compared to the S&P 500, as we do have a lower high between last week and this week. So pay attention to the Qs and the SPY this week, because if we do roll back over and start to sell off again, that would definitely be a switch. But that did also happen between mid and late June. But that one, we wound up rallying on the market as we got inflation data earlier in the month of July. But you can see here that the S&P 500 definitely pushed higher, broke over last week's. So really, all I'm kind of watching going forward is bond yields. If bond yields continue to push higher, that's probably going to get people very interested to go lock up rates guaranteed for the next couple of years. Especially on that 2-year, watch that one, because we've seen more and more bulls, or that have been market bulls over the past several months, are now saying, you know what, we could see a pullback here. But if bond yields continue to push higher, a lot of people will flock out of equities and go lock up guaranteed returns. So that's really what I'll be watching. And this next week coming up, we also do have Amazon and AAPL going to announce earnings Thursday after the bell. Alrighty, Outfunders. Have a great weekend. Take care.